Buy side
Okay.
has been taken out, so we're waiting. This is the retracement that we see. I think it's gonna retrace towards this order block, this area. Then it will push. It will push up again. So let me add Usdchf. Usdchf. Okay. Yeah. I'm adding Usdchf. Then we see what we're gonna be having. Black and red. It's not this one.
And green.
Red,
Black and green. Huh?
black and green.
Green and red. But it's fine, that one.
I don't want you to get, it's fine. You won't get confused with the interpretation of the colors.
Or you can put that black and white paper which you used to have.
Okay, okay, this one
Yeah, that one.
is fine.
Mm.
Gonna look at the old approach, taking it from daily.
Mm.
Precisely, you know what we're gonna do when we're doing top to down analysis. Let's start, let's go through it.
Mm.
This is daily.
So we go to daily. Yeah.
Mm-hmm.
The other floor, it's bearish.
Okay, the order flow is bearish. Why?
Uh, the series of lower highs and lower lows.
Okay, okay. Let me first mark this previous price action move. Okay, the order flow is bearish. We can see the internal break of structure here.
Mm.
You're so right. The order flow is bearish. Yeah. And for that, what next are we gonna do? Because this is our most recent break of structure on daily.
We look for our recent swing.
A recent swing, yes, it's a swing what?
Swing low.
It's a swing low, yes, I can see. This is our swing low after price
So
on daily, after a price took out liquidity from this old low. So we came up to the price actually trying to reverse. So our recent swing is a swing low. This is a swing low. And again on daily, don't forget we have to mark our
mark our order block. Yes, our POI.
Yes. So basically, this is our order block. We're marking this area of supply that we open to So once we put now, do you know our trading range? Where should our trading range be? How do we mark a trading range? For example, now we are trading according to the bearish order flow. How should we be able to mark our trading range on daily? Like
we put our Fibonacci from the lower highs there.
From the lower highs here, okay.
Going down.
Yes, you could see
yes.
price is actually is still below it. It grabbed actually it's still below equilibrium. So we're still in this, right? And since we're looking for sales, we won't do anything. We will wait for price to go back to premium. Yes.
Supply, yes.
Yeah, supply. Then we see if we could get confirmations to sell. So it's fine here. Daily already. We came up with our order flow. We know it's a bearish order flow, and also the direct. Yes, we could see we are currently having a swing low. So basically, we're in the complex pullback, right?
Yes.
So where should we go now?
We go to 4 hours.
4 hours. What are we gonna do on 4 hours?
Mark our BMS.
Our BMS. Okay, let me see the BMS. This is not a BMS to me because we don't see any candles closing above. What are we gonna do again?
We mark we refine our order
Okay,
block.
we're refining our order block. This is now the refined order block we have. And we're still continuing to mark our liquidity. Don't forget, we still have to mark our
Yes.
liquidity zones. So you see here, what we have here?
Yes.
You see, this is some kind of liquidity which we have. And other things we have to mark also, which comes towards which we can conclude as liquidity. What do you see between here?
FVG.
Yes, this
Yeah.
G. So we mark it already. Even if you don't mark it, you can please see it. So looking at here, where actually when we're looking at this complex pullback, we saw that price pulled back, is trying to pull back. This was our chalk. When price try to confirm our pullback, our complex pullback. You know, this was our chalk. And you know, like price did, it broke structure to form a chalk. And afterwards, do you know what it did? Price retraced back. Yeah.
Price retraced back to that
Yes,
order block.
to this order block. Actually, I've just marked the rejection block. Yes. Or we can still say, we can still mark our entire order block.
Can I please ask it there before you go for?
Yes.
What is a rejection block?
A rejection block actually is kinda like an order block, but a rejection block actually consists of 3 candles. Yeah, it's actually a rejection block. You mainly find it on swings, either swing high or swing lows. So you always have to look for 3 candles, and to consider it as a rejection block, the 3 candles, the mid candle, the insider candle, which is in the middle of the other 2 candles, must be having the longest wick. Yes, longer than other candles. So if you look at these this 1, 2, 3, these are 3 candles, you see? Okay, let's take this as a rejection block because, okay, let me give you this as a good example. You see this long candle as I've marked?
Yeah.
You see, basically, this would be our rejection block because there's 1 candle, the second, and the third one. You can see where I'm pointing.
Yes.
These are entirely 3 candles. So we always have to make sure that we look at the mid candle, the one in the middle. It should be having the longest wick.
Sorry, I didn't hear you.
It should have the longest wick, the middle candle, the candle. So the wick from the open to the low, we only mark the wick. So that what we can use as a rejection block. Price can always react or respect that area of the wick. So that's a rejection block.
Okay.
It's not an order block. So here, let's just mark the order block.
Okay.
So the order block, actually, I would mark this green candle because most people actually, according to the basics, we normally take an order block as the last bearish candle. You could see this should be our bullish order block, but the right order block should be marked. Actually, regardless of the color, you always have to consider the candle which protruded, which had a wick below, which gave us a wick below, which took liquidity. Yeah. So this order block is validated. You wouldn't mark this red as the order block because the liquidity was taken out. You can see.
Okay.
Yes. So for the order block, the right order block, we entirely actually the most recent candle which took out liquidity, even if it's a green candle. So this will be the order block. I would be marking green candle. Yeah, but it's not a case. You can still mark your red candle, but you extend your rectangle towards this recent swing low. You can see.
Okay.
Yes, so price retraced
Okay.
here. And you could see here a couple of touches. It made actually another pool of liquidity, which is equal highs here. Was a liquidity grab, as you could see. We don't see a valid break of structure here. You could see. So price has it retraced, you know, whatever price retraced. So which move is this?
Oh, it's a complex pullback.
Okay, it's a complex pullback. So in simple terms, it's an expansion move of the complex pullback, right?
Yes.
So since now we managed to retrace back here, so what are we aiming? We aiming for what? Which area are we aiming to take out?
The equal lows and
the not equal
internal
uptrend.
So equal highs. Sorry.
Yes.
Equal highs.
Yes, these
And
are
the
equal.
AVG.
And the AVG and also this liquidity, the internal range, exactly. So basically, this is what we're looking at. We able to mark all our liquidity pools. And we hope that price really continues to do what?
To buy.
To buy towards our POI.
POI, yeah.
Yes, POI. So this is our supply area. Actually, you know how you would entirely confirm your sell in case price reaches here on H4. What are you going to do if at all we might see price here at H4? What would you
go to 15 minutes lower time frame?
Yes, you're gonna go to 15 minutes because price will be somewhere there. So 15 minutes actually we still in a sell regardless of this pull, we're still in a sell. What we are seeing, we are hoping to buy, to continue buying from here. The reason being that we are now aiming for the Asian lows. You remember our power of three. We talked about power of three. Accumulation,
yes,
manipulation and
distribution.
distribution. You could see it first took out the Asian high, now it's aiming for the Asian low, then it will continue to buy.
Okay.
So this is the Asian range. So we're aiming now to take out on 15 minutes this side liquidity. You can see. Let me nice, you're gonna see it. Yes.
And there's a volume imbalance below.
Exactly. And you've seen a volume imbalance. That's what we also gonna target. Yes. This block is high probability order block on 15 minutes because it's having liquidity above it, right?
Yes.
Yes, we have the equal lows below the Asian range. These are the equal lows you can see. And we have the volume balance, you could see. So basically, we're gonna wait for price, tap in here, and then what are we gonna see?
We're gonna buy.
We're gonna continue to buy, and we're gonna be targeting all these previous liquidity pools. First of all, we're gonna target this AVG inside.
AVG.
Yeah, inside. Then the equal then the equal highs on H4. So you could see. Yeah, so we're still bullish. We're still bullish targeting the supply area at the extreme to see if we continue selling next week. So this is what actually we might see happening.
Okay.
Yes, hope nothing's confusing you.
Nah, right now, not yet.
Not yet.
Only the adjustment sometimes.
Okay. Oh, so this is USD.
Chef.
Yeah, Usdchf. Yeah, we're buying to sell. And Nasdaq will be selling
to buy.
To buy. I think if we will be selling Nasdaq, I would mark my buying zone to be here. Honestly, yes. Because, yeah, this is nice. What's happening? Oh, marking the wrong
Can
card.
I ask something?
Yes.
That volume imbalance was caused by what? Is it news or it's weak? It was weekend.
No, it's not weekend. You can still find volume imbalance during the week. It's not actually the guy.
No.
Yeah, can cause
What's the cause of that, by the way?
the volume imbalance when there's no action of price movement there.
Okay.
Broker didn't print any action of price move. So when it's on the side of broker, to me, that's what I can tell you.
Okay.
But basing on what now we have, this volume imbalance to be filled first before thinking about continuing to buy.
Okay.
It's a complex pullback. This is H4, even if you could say Usdchf is buying sell honestly, according to the way I see. Yes, it's buying to sell. It's buying to sell. Yeah,
Okay.
it's a complex pullback. And you can see price will be buying within this channel. Yes,
Okay.
then after, we shall see that we could sell it. So which
another one. Let's try AUD. AUDSD.
USD, AUDUSD.
Yeah, I would rather stick to majors for now.
Yes.
Before I go for big big money. I should go for at least
Yeah, but you're
yeah.
right. You know, you've tested Forex. Can mold you till when
Yeah, at least I'll maintain the measures for now.
okay, you can see we're gonna analyze it nicely. And
Yeah.
this is what we see. Daily, I hope you won't get
Daily, daily it's bearish.
daily is a bearish order flow. Okay, because this is the previous let's say it's a liquidity graph. We don't actually see structure. And here the previous swing low hasn't been taken out. So basically, if we don't have any break of structure above, or it has been trading within a range, you could say on daily, it's a range. But entirely, since now we have this previous break of structure, it should be bearish. It should be a bearish order flow, still intact with a bearish what? Order flow. So basically, what price did, this is what happened. This is our supply area. Yeah, where price actually tapped before continuing to drop or rejected from this supply area. So we're still under it, but it's still a bearish order flow, which means if we are to sell, we shall be aiming for this daily low. This is the liquidity from the old low, the sell side. Yes. So what are we gonna do if now we are what? We are bearish. We are bearish, but we're trading within the daily range. So this is the internal and the most recent internal break of structure, which I'm marking, which price already mitigated back the what?
The supply area.
Yeah, the supply area, and now of the range now is trying to come down to take out all this liquidity, which I'm gonna mark here. We're gonna see it on 4 hour clearly. So basically, what we're gonna do on page 4. It's clear now.
We're marking our BMS.
Okay, we're gonna mark our break of structures, but you still know that we're trading within the range. So the BMS that we have already, let's see if this one is a valid BMS.
Hello.
It's a recent one. Price is trying to attempt to create a BS. You understand?
Yes.
Yes, yeah. So you could see that this was just a retracement. Let me first mark this first. We're gonna mark the chalk within the range so that the internal chalk where price gave us a sell. But let me first configure this out. This is a pool of liquidity. We can see the equal lows, you see?
Yes.
Yes. So let's first mark this as our EQL. So fine. Here, this was our chalk. You see? Yeah, it's internal. This was our chalk. You could see the previous
Yes.
was buying here, buying, making higher highs within the what? Within the range, you could see. So
Yes.
meaning
Yes.
price came to turn by taking out this previous what?
Yellow.
Higher low, and it took it out. You could see this was a chalk. Yes. After that, yeah, we had to do what? We had to come and retrace back. And you know the reason why we traced back? We had somewhat
FVG.
yes, it's the reason, and we had some also liquidity. You could see there was some liquidity nearby side. You see?
Yes.
Price came and filled the FVG and took out liquidity and made sure it mitigated exactly this what? IPA candle.
Okay.
Yes, yeah. It didn't touch the extreme order block, as you could see. Yes, it touched a candle. IPA candle is the candle which creates the imbalance, which seals up the imbalance.
Okay. Okay.
Yes. So basically, you could see price rejected in here. The area of supply, even if you put the Fibonacci from the higher high to the lower low, you could see that price sold above 61.8, you could see.
Yes.
So basing on what we see, we running bearish. Yes, we running bearish. And for the reason why people actually were able to confirm this bearishness, how will they be able to confirm this bearishness? And we are targeting also this daily low. This is where we're targeting when we sell. Yes.
Okay.
Yeah, meaning the time we're gonna be sell, we're gonna be focusing on which liquidity?
Equal lows.
Equal lows and this odd lows.
Old lows. Yeah.
And also this internal range, right? 15 minutes, how did people confirm the entry? Yeah, because
15 minutes.
we had the Asian range. No, we always have Asian range. Then what happened?
Price retraced. Looks like 70% of the FVG, if I'm not mistaken.
Okay, price retraced, broke, it grabbed liquidity, it entirely actually managed to wanted to break, but it couldn't. And after that, fine on lower time frame, and it retraced back. It retraced back where? To where?
I think
To the FVG.
above 50% of the FVG. Yeah.
Okay, yeah, exactly. You got it right. It's like 50-60%. So entries were made on the FVG. So this was a combination entry because this was our chalk. Can I show you a chalk within the?
Yes, please.
So this is a chalk, you see?
Yes. Okay.
Lower high being taken out to form a chalk, and this was our order block. Though price didn't tap our order block. Or B. Price sold, engineered some liquidity. Actually, it sold within the AVG.
Okay.
Yes. So basically, you know that people have been holding sales, and when you're selling, you keep on targeting these swing lows for your profit targets.
Okay.
Yes. So this is entirely bearish to me. Yeah, it's entirely bearish to me. Yes. It's the opposite of Usdchf.
Okay.
You could see, yes, it's the opposite of Usdchf. So
Yeah, so the other thing now, since sometimes price sells at the AVG, some
yes,
of
that's
us learners, we won't know. We'll be waiting price to go up there.
that's the that so
That's the problem.
market makers make, you know. But as a confirmation, when price sells on AVG, you have to confirm it. You don't take it immediately, because when it sells starts to retrace, then you enter on a confirmation.
Okay.
Example, let me go back 15 minutes. Do you see that it's sold at FVG?
Yes.
The only confirmation people waited for is this retracement here.
Okay.
People entered on this flip zone. This is a flip zone. It nearly came to the flip zone. This is the support which became which became resistance. Price almost retraced here. So second entry was here, somewhere here on this other AVG. It was on the AVG again. You could see. Yeah, it's 50% somewhat. Yeah, some kind somewhat. So it's like that. You wait for another re-entry. Okay, chance to enter on a swing eye, which is a lower eye. If you cannot enter immediately, wait for the second opportunity to enter on a swing eye.
Okay. Okay.
So this is bearish. The reason why it's bearish, because the order flow is bearish, and it's aligning nicely with the what? With the daily and 4 hour. Yes. So everything actually is clear. I think if you have a question, we can still look at what's confusing you. You see, it has been training within this channel.
Okay.
Yeah. So we have 9 minutes.
So you say the flip zone, it's
Okay, a lot of things that we haven't touched on, but let me explain briefly what we mean by a flip zone. A flip zone is a kind of scenario whereby, let me say, demand becomes supply or supply becomes demand. Do you see what I'm marking here?
Yes, yes.
Okay, I'm gonna mark exactly this here. So when we started from here, let me mark this order block. When we started from here, this was our, right? So we had a key level we broke when we started to sell. Let me show you with the arrow. Price displaced down, it broke structure down, right?
Yes.
This area it broke is the area of support. This is initially, this is where price was before it sold. This was the support area. You understand? You it originated to buy first before it sold. You see?
Yes.
Yeah, this was a previous support or demand area, because you see this week, the week of that red candle where I'm
yes.
the buying was from the demand. This was the demand area. We marked it with a trend line with a line. Then it went to and it was confirmed to sell. So the time it started selling, it sold and broke that demand area. You see the support area. You see what happened before it continued to sell? What did you see? What happened?
Before it bought.
It bought towards the what? Towards the what?
Okay, that's flip zone.
Yes, it
That
flipped
support
back.
area.
So support became what now? Support became resistance. That's why we sell now.
Okay.
So it's a flip zone where the support rejected price. So wherever support rejects price, support stands to resistance where you can sell from. It's a flip zone. Yes.
Okay, I see.
We could call this a flip zone, right?
Mhm.
Don't forget it.
Yeah.
Ah.
I hope you are recording. I want to revise back.
Yeah, so we can make entries on flip zones. And on flip zones, that's where most of the time we find mitigation blocks and breaker blocks. Know that they are always aligning with the flip zones. Yes, there are the flip zones, mitigation blocks and breaker blocks. Yeah, they are within the flip zone. You know where you can find a breaker or a mitigation block. I have only 6 minutes. Let's just look at it. Let's see, look at anything we can find. Okay. So do you see? Let me see. Yes. Okay, let's use this example. Let me do this. We're gonna use this example, eh?
Okay.
What pattern do you see here? Is it a breaker or a mitigation block? Because
it looks like a mitigation block.
Yeah, okay, let's see if it was a mitigation block. Yeah, it's a mitigation block because no liquidity was taken out from the previous swing high. So I'm gonna mark the mitigation area, the mitigation candle, right? So that I can show you that this order block aligns usually within the flip zone. So this entire area is a mitigation block. Though we actually have to mark this last bearish candle as a mitigation area. So do you see what happened?
Sorry?
Do you see what happened when price came and broke below? The mitigation broke. What happened when it retraced back?
Again, it bought to that
It bought to same level. So the same level, which was a support, became what? Resistance. So this is the mitigation block. Yes, it's so that the mitigation block. So flip zones, you can within the flip zones, you can be able also to be able to mark your order blocks or mitigation blocks.
Okay.
I was just trying to show you the other picture since you know how to trade order blocks, breaker blocks, and mitigation blocks. It's easy to flip zones is. And flip zones also is entirely a scenario where a supply price breaks supply area and then it rejects, it's come back to retest it. So that supply area becomes demand area since price would continue to go higher after breaking the supply area. So flip zone supply becomes demand or demand becomes supply. That's a flip zone. It's the easiest way to understand. So price breaks and comes up and comes back to retest the same zone and continues. Okay. Yes. So that's the end. See tomorrow. Eh?
I said Neanza. I hope I'll do it right. I just pray I get it right this time.
It takes time. It takes time.